In this video, I'm going to show you a real trade I just did some minutes or hours ago. It was a very, very quick and profitable trade. And after showing you a very quick overview of the trade, I will show you a detailed analysis with all factors I considered in order to make this decision. I'm gonna analyze the market structure today. The opening just happened 3 minutes ago. And as always, we're gonna trade the S&P 500 mini or the micros, S&P 500 micros, depending on the volatility. I want to make an analysis as I always do. And I'm gonna do that from the scratch so that you can see what are the main things you have to look at when trading futures, S&P 500 in this case. Yesterday we had a huge downtrend, and now the price is kind of consolidating in a channel. This spike and channel structure is typical in other time frames, but now we have it in a higher time frame. We have to check the ranges we have right now forming in this time frame, because as you can see, they are quite clear. We have a range here. We have smaller ranges. There is another one here, and there is one here, and there is the last one is at the bottom. Actually, the price has been in an indecision zone all the time during this day before the opening in America. The question is, which range do we consider now? And as I always say, when you have a lot of ranges, you have to be on the safe side, and to be on the safe side mean you have to be at one side of the range. So if we trade inside the range, it's very, very, very difficult. We have an indecision zone. As you can see, people are moving price back and forth. There is no clear structure, no clear pattern we can trade there. You can try things, but it's just a lottery ticket what you are doing there if you trade inside these ranges. So what I like to see is price coming down and retesting the previous swing low of the day. And then from there, we are gonna, maybe it would be also good to see price coming down and trying to make a breakout of the swing low. And from there, we can try to find patterns in order to trade this thing back up again. The reason for that is mainly that we would have all ranges above us attracting the price, attracting price. And by doing so, by trading long at this position, we would be at the more secure side of any trades that you could do here. Because otherwise, if you trade in the middle, you don't know exactly which magnet is the current one, because all ranges act as magnets, and price is gonna rotate back and forth in these areas as well. So there is no clear direction. It has to be a retracement at some point. You could also enter here if you see a trap. This is also a trap level. You could also enter here, but as you see, price has been rejected at this level as well many times. So I wouldn't risk it. I would wait, as I said, till price comes down, and from there we can look for further patterns. You could also, if you want, you can check on volume profile, and as you see, the biggest volume is almost here. This is not a science. It's more or less. It's not mathematics. And now we have this range is the very last range. So maybe this one should be the range we should consider now. But at the same time, we have to take a look at trend lines. Maybe there is a bigger trend line. Price is jumping up. I don't like that. I don't like that. So now we check all trend lines that we have. Oh, that's crazy. The trend line is also there. So it would be nice to see a retest of this trend line at least. So we have a kind of confluence level here, which is this level. See, this is a kind of confluence level. Or we can wait for a failure of a nervous entry signal. In this case, we are seeing like two legs, and these two legs are different. But don't get fooled by that. There is another one here. 1, 2. This could be the third leg actually, and this is also a trap level. Look at this. There is this very small swing. This is also a trap level. So now it's perfect because we have confluence. We have the POC. We have this trend line in the higher time frame, and we could go now long. We could go long now as soon as we cross the trend line and we retest the trend line. So that's what I'm going to do. Let's wait, because we are still under the trend line. and maybe, but this is a trap, right? This is a trap level. This could jump now. Let's see. Let's see what happens. This is the trend line, and we are retesting the trend line somehow, and this could jump up. I need a candle closing strong at the exponential moving average, which is the blue line we have here. This is the only indicator I use when I trade these markets. You know, you cannot check on many indicators at the same time when you trade these markets because it's almost impossible to do that. It's always good to have. That's the reason why price action is essential to trade the S&P 500 mini. So just focus on price action and focus on the exponential moving average and all resistance and support levels, trend line channels, POCs, volume, and so on. We don't need lagging indicators. Lagging indicators are just too late for us. For a market like this, which moves so quickly, you cannot rely on lagging indicators because they are too the signals come too late normally. You will get signals which are really late, and you will always get stopped out very quickly. So that's the reason why we have to focus on price action all the time. Let's see if the second leg is already finished. I like to check on the measure move. The measure move is this one. This could be the measure move, or this one could be the measure move. Let's check on that. This is the measure move as well. So I like to see a breakout. This is the swing low, the previous swing low we had today. And now price is jumping. As you see, it's also a kind of trap here. So this could also work as a trap. Let's check if we can, yeah. But there is another way of interpreting this pattern. This is a spike and channel, and these channels they like to retest one of the in this case the lower line of the channel 4 times. 1, 2, 3, and 4. And now we are getting the fourth retest, and this could be also the interpretation that we need to in order to anticipate the end of this move. This is the end of the measure move. We have the fourth retest of the channel. I will show you. This is the spike, and this is the channel, and we have 1, 2, 3, and 4 retests. Of course, we have now a very strong downtrend, but I think this would be too far. In order to be a downtrend, we should see now a huge spike down, crossing the lower line of the channel, clearly indicating that price doesn't respect this lower line of the channel. For the moment, we are inside the channel, so there could be a big retracement back up again. And one of the reasons is that we have these ranges, a lot of ranges here, and this could be a reason for they are the magnet of price right now. We could also, let's do it like this. I want to see exactly. Okay. Yeah, you see that they are moving price up. They want to move price up. Yes. I need to see red. I need to see red. Sometimes you don't see red. Sometimes they just push price up. I need to see red. Yeah, now.
Order filled.
Need to see red. And I'm already in the trade. So now we do like this. 5. It's like this.
Order filled. Order filled. Order filled.
Two-candle trailer. When this push is so strong, you can do like this. You can go two-candle trailer, and you will see it's.
Order filled.
If you're interested in price action, you can check out also my book. It's called What Professional Traders Really Use, Price Action. And most of these things you can use for futures, but also for stocks. There is also a free chapter where I explain how to use measure moves, because I think this is one of the tools every trader, professional trader, should know when you don't trade with indicators. Measure moves are the order of the market. Actually, I call them the order of the market. And check on the link below in the description, and you can download the chapter if you're interested on that. This is the rotation I meant before. So we were expecting a rotation, and at the beginning I took the trade quite late, but it was pretty clear that they were moving price back up again. And that's it. That's the trade. And if you want to know more details, you have comments, please, and I will give you my answer as soon as possible. And so thank you very much, and see you next time. And be very careful today, because it's Friday, and Friday is always quite a tricky day. Be very careful. Don't trade so much, and see you next week.